Alright, so good morning to traders. Winston Kutsia, aka Mr. Mayor Forex Trading. So good to have everyone on board. Welcome to this lovely Friday. Of course, today is Friday. And you know what I like about trading for years and years and years now is that you get to a point on trading where you just start knowing. You know, you don't need any technical things or any news or anything like that to tell you what's going to happen in the market. You start getting to a point on your trading journey where you just know. Call it intuition, call it knowledge, call it luck, call it whatever you want to call it, but you know, and I'm at that point in my trading career at this moment where, you know, I just know. I just get things so spot on and so perfect that sometimes I surprise myself. But believe you me, I do. Sometimes when I'm like, what the hell is going on? I'm like, wow, okay. I surprise myself. But you get to that point, I think, in your trading career where you just get it right without, you know, breaking support or resistance or trend lines or any physical indication. You just get it right. I'm going to explain that statement to you guys now. Give me 2 seconds. I'm going to take a sip of my coffee. We South Africans, we drink coffee. We don't drink tea and iced tea, and we drink coffee. Plus, it's almost 8 o'clock in the morning. And I've got a long weekend ahead. I've got a show tonight. I've got a show tomorrow, which is Saturday, and then I've got a show on Sunday as well. So I'm having a full weekend of rocking and rolling, basically. For those who don't know, trading is basically what I do to build up a pension and to build up a retirement fund for myself, as I am a musician. So yes, that's why I get to trade Mondays to Fridays in the mornings, because, you know, you don't do shows in the mornings. I only do shows at night. And trading for me was a good saving grace when it comes to what am I going to do to retire. Because it's not like, the music will pay a retirement fund. So I need something to fall back on. And that's why I started trading, what was it, 7 years, 8 years ago, 7 or 8 years ago, I started the trading journey. And out of those 7 years, I've been a profitable trader for the last 5. It took me about 2 years to become a profitable trader. 2 years of hard learning, hard lessons in life, blown accounts. I wanted to quit so many times, it's so many times. Because I read books, I checked and I studied online and I watched videos and try to gain as much knowledge as I can, because a normal person, when you learn something new or you want to do something new, you learn about it. You take books and you learn. But trading is not so. Trading is not something you can learn from books. Unfortunately, trading is like an apprenticeship that you have to do. It's you learn on the job, basically. And I'm going to tell you off the bat, the first 2 years of your trading journey, you're going to learn lessons that is absolutely going to, number one, test your patience. Number two, test your ability to continue on, once you get knocked down, just to get back up again. It's going to test your ability of perseverance, definitely. But I'm here to tell you guys that just push through. Just push through. Just push through, because it does get easier. It does get easier, and trading is fun. It does get easier, but it's unfortunately, that's why so many people quit trading and give up on trading, is because it's not something you can learn in books. It's not something you can learn at school. It's not something you can just learn and now you know it. Unfortunately not. Trading, you have to learn on the job, and the only way you can do that is by making mistakes, blowing your accounts, but push through. That's why only a handful of people that start trading actually make it in the trading industry, is because, not because they know more than you or they are better than you or they've been schooled better than you. No, because of perseverance. They push through. All these traders, I'm talking about the professional traders, the guys that trade online and trade live, and the real traders. I'm not talking about these fly-by-nights, put up a couple of winning videos and try and sell you shit, oaks. I'm not talking about those fake fucking traders. Those are not traders. They just scam artists and scammers. I'm talking about the real guys, guys like me, guys like Trader, Nick, and a lot of the other guys that just, the trade live on YouTube. If you're looking for someone to follow, look at people that aren't afraid to trade live on YouTube, like me or a couple of other guys. Those guys that put out those little videos and try and sell you shit, move past it. But the point is, what distinguished us, even those guys, even top guys, had to start somewhere. I'm sure if you ask Trader Nick, how many times did he want to quit when he started trading, he'll tell you the same story. He probably also wanted to quit a lot of times, because it's hard, it's difficult. Especially if you put your own money into trading and you lose your own hard-earned cash. It is hard to get up from that. It is freaking hard to take money again and put money again into your account and then lose it again and again and again and again. It's hard. It's not easy. If trading was easy, everyone would have been doing it. It's not easy. But the more you trade, the longer you trade, the easier it gets. Just remember that. Please share this YouTube channel, share this video, subscribe, comment down below. My name is Winston. I've been trading professionally now for quite a couple of years, And this is my trading journey. And I do trade live every morning, Mondays to Fridays. Some Fridays I skip because, Fridays the markets are usually quiet. But today there's going to be some action on the markets, and we're going to have a chat about that. Let me just have another sip here. Oh, man, this coffee is so nice. Oh, this is so good. Oh, man. Okay, I think it's 8 o'clock. Let's jump into the markets. Let's see. Yep. Alright, here we go. First of all, I want to start off with the two trades that's in the red at the moment. That is the Euro USD and the Pound USD. So, let's start with the Euro USD. It looks like the Euro USD did find some support, some pushing to the upside, but I think it's more just to build up some liquidity in the market. Look, for every trade, for every move the market makes, there needs to be money in the market. So, because how do you make money if there's no money? So, the market movers, the big boys, they create opportunities, or they take advantage of opportunities where they can take stop losses and fill the market with money. And then after that, they make their move. Alright, so they are looking, you can see there where they are with the prices now. That is a perfect location for stop losses, especially people trading with a very shitty risk management. Especially those people that are trading with high numbers, high volumes, and just, they put 10 or 15 or 20% of their account on the line here, and then they put short little stop losses. The stop losses are just behind. They put very, very tight stop losses, and that is what the market movers are looking for. The institutional traders, they are looking for, where do these dumb suckers, these day traders like me and you, potentially you if you are a new trader to this, where do these suckers put their stop losses? Because of course, they need money in the market. They need to get money in the market to make money. So where do they get it? By the suckers that put their stop losses very tight. This here is a perfect example of a good stop loss position where there is a lot of stop losses right there. A lot of people saw, break of structure, a retest, and then a second break. That is usually where I put my trades in, is on that level over there. So I did put my trade in. And if you saw a lot of traders do the break of structure, retest, and as soon as that retest is done, they put their trade in there and they put their stop losses right there where the market is at the moment, where price action is there. So they put it in and expecting to have a nice run down to the downside, and then price does this. Takes the stop losses, stomps it out. If you didn't have a trailing stop, that's what happens there. So a lot of stop losses are taken in, so which means liquidity, money, is coming into the market. These big boys are building up money in the market so that there's money when they make their move, when they move the markets. So that's why if you look at my stop loss right up there, way up there, out the way, you don't want to trade with big lot sizes, big volumes, over leverage. You don't want to do that, because then you have to have tight stop losses, and majority, I would say 90, remember there's no scientific backing behind this, just my own personal experience. 90% of the trades that I've lost when I started trading was because my stop loss was too damn tight, too damn close. It happened 90% of the times that I lost the traders. The trade goes in my favor, then it comes up, takes my stop loss, and then boom, goes in the direction that I wanted it to go into in the first place. Then I'm like, fuck it, why? Until I started understanding what is happening, until I started noticing or understanding why that is happening. It happens, like I just explained, because these big boys, I'm talking about the big oaks, the banks, the institutional traders, the hedge funds, the big oaks, they need money in the market. So they will go grab it where they know us suckers put our stop losses. Majority of the day traders and the scalpers, I'm not basically talking about the scalpers, I'm talking about the day traders, put tight stop losses. You put it just above, like here, here's another resistance over here. So you'll put your stop loss just above there, you know, and you don't do that. Or here you can see a break of structure, and it's retesting, it looks good. It came back for a retest and it's getting some resistance over there. So you put your trade in, you put your stop loss right above there, and then the market turns, takes your stop loss. If there's anything you can take away from my style of trading, it is number one, only risk a maximum of 1% of your account. Only risk a maximum of 1% of your account. So this is a $10,000 account. My risk is $100 on a trade maximum. I try and keep it to 0.5% of my account, to $50, $60. I try and keep it there. But sometimes I will go up to $100 that I risk, but I will not risk more than that. I will not risk more than 1% of my account. It is stupidity to try and risk more than 1%. Because if you do that, you can't put wide stops. Get your volume, get your leverage at the right position where you can, like where the stop loss is there. That is $62 or $70. That's my stop loss, $7. And look how wide it is from there to there. Look how far I am. Majority of the people lose their trades because of tight stop losses, over leveraging, you're putting up half of your fucking account on a trade. You don't do that. Don't do that. Money management, risk management, that is the utmost important, and any professional trader will tell you risk management is your most important thing in trading. Before you even start looking at breakup structures or looking to place a trade, you need to have your risk in check. You need to have that in check. Please, all potential traders, please. And as for my trading channel here, it's a new channel on YouTube, brand new. I've been trading for a while, but I just got so sick and tired of going through YouTube and seeing all these gurus, these fucking traders popping up, posting winning trades. One winning trade. He caught a nice winning trade. Putting those trades on there and then trying to sell you a course or sell you an indicator that you do not need. So I just got so tired of seeing these people fooling potential new traders. So now you put your money into this person, buy his course, and with the mindset, now that I've bought his course and did his course, now I'm going to trade like him. And then what happens? You lose your trades. You lose all your fucking money again. That's what happens. And I got so tired because those people that are scammers, they are scammers. They are scammers. They are scamming you. They are. And that's why I started this YouTube channel. I'm asking you guys to help me grow this so we can fight and combat those fucking people. If you've been scammed like that, share this YouTube channel. Join this YouTube channel. If you have been scammed like that, down in the comments, tell me what happened. Tell me who scammed you. Because this is why I decided, I'm not big on YouTube. I don't have fancy things and fancy editing equipment and whatever. I don't, because I'm not here to try and make things look all pretty and cool and whatever. I'm here to trade, show you my way of trading, show you live on YouTube how I trade, and if you find value in it, fantastic. And I'm here to try and combat these scam artists, these trading gurus. You will never see those. I almost said something nasty, but they make me so angry. You will never see those people putting up these winning videos. You will never see them trade live. Why? Because they can't trade. They don't trade. They only scamming you. They make money not by trading. They make money by selling you shit you don't need. Anyways, I'm not going to go on to that. That's not my plan for today, but it frustrates me. It is, whenever I do see these videos on YouTube of these fucking trading gurus, I want to blow a cap. Anyways, I'm trying to sell you shit. I'm never going to sell you anything. I don't want to sell anything. I just want you to find value in what I do. That's what I want. Anyways, that's why I don't have a Discord. I don't have a, what do you call those other things as well? Patreon or whatever the cock. You can see I'm not used to this. I don't do this shit. I just trade. I don't have that. Anyways, in the comments, tell me where have you been scammed and who has scammed you and how you've been scammed. Just let me know so we can start combating these fucker fake gurus and get people that have got potential become great traders on the right path from the start. Alright, let's continue on with the, I'm not going to go down there. You see, those fucking people irritate me so much. I just want to ring them. I just want to rip their throats out. But anyways, so for the Euro USD and the Euro and the Pound USD, the reason I've got a sell order in is because number one, is at a major level of resistance, and it fits in with my trading style. There was a break of the previous low. This is how I trade. Break of the previous low, that one there. That low got broken, got retested, and that low, the low that broke the previous low, got broken as well. I always wait for a second run to keep me out of those little fake out situations. So it broke there, formed a new low, and I put my trade in on the candle of that. It was a pre-order, so price came up, put me in the market, and then went down to the downside. Now, yes, it is pushing up to the upside, but like I said in the beginning of this video, there needs to be money in the market. There needs to be money in this that you are trading. So I allow the big boys to do whatever they need to do, take out all the stop losses wherever they need to take out the stop losses. My stop loss is far right above there. If price action does break this stop loss, then, or break this resistance over here, then I know, okay, I was wrong, price is gonna go back up to the upside. But then the same thing applies. I just wait for a break of structure and a retest in a second run. I'll wait for the break of this major resistance over here, a retest and a second run, then I'll put a buy order in. But I've got a slight suspicion that we are going to see a nice pull down to the downside coming from the Euro USD and the Pound USD. Alright, so let's jump to the gold quickly. I just want to show you guys the gold. What happened yesterday's video, I told you guys, price was, I think, still here, somewhere around here. Somewhere around here, price was here. Where I told you guys, I entered the trade here somewhere. Let me just get closer so I can show you guys. Alright, I'm going to put my trading history on there. See, I entered this buy over here, right over here, because it was a push to the upside, made a new high, and then a push to the upside, made a second high. And then I waited for a third time for this price action to be broken. So it broke, and I just decided, well, okay, well, so there's one, and then a push to the upside for the second one. And as that candle ended, I put a buy order in. So the buy went in, and like I was a little bit in profit, but yet again, I had my stop loss. I'm just going to use this. No, not the box. I don't want to use the box. I'm just going to use this one as an example. I had my stop loss right below this box that I made. So right below there. Now remember, I ended for buy position there. I had wide stop, very wide stop. So price came down, nearly took me out the market, and then went in my direction. You see why it's important to have wide stops. I entered this trade there, and I'm still in this trade because I had wide stops. So my stop there was at $100. If you go back to yesterday's video, my stop was there, and I showed you, look how close I came to being stomped out the market, but I had a wide stop, and plus my level was $100 max, and the stop loss was at $100.80. So that 80 cents helped me a lot. Because I nearly got stomped out there. But luckily, I didn't get stomped out because I create wide stops. And the market went in my favor. And then with yesterday's video, I told you guys, you see this? This is an abnormal movement. This is those big boys putting money in the market so that there is money for them to make their move. That's simple, that easy. This is an abnormal movement here because price is going in an up direction and all of a sudden, zoop, right back down there, taking out everyone's stop losses. Everyone's stop losses that was here because they saw, oh, it broke above that. So now it's keeping above that, so people put in buy orders, and the people that over leverage and so forth and go too big in it have got tight stop losses because they don't want to, don't want to lose too much. And guess what happened? Everyone's stop losses got taken out, and there we go. Look at this big momentum to the upside. And yesterday, I think we were here yesterday we were here yesterday, where I spoke about, I said, gold is going to make a move now. Because of this year showed me that gold is going to make a move to the upside. It showed me properly. There it showed me. That told me. And we were here yesterday. Yeah, somewhere around here. Go check the video from yesterday. You'll see. That was before all of this was there. And I told you guys, gold is going to go for a run now. And look at that. Skyrocketed out. Yes, did a bit of a retest and whatever. But this is now where my stop loss is, or my trailing stop is at $103. So in this market, I am $103 in. I pocket it. It's in my pocket. There. So from almost losing $100, I'm actually $100 up now on the gold because of nice wide stops, low volumes, low leverage. I don't over leverage, and I don't try and risk 50% of my account. Okay, what I'm thinking of doing, I'm going to discuss the gold now in detail. What I'm thinking of doing is, this is my take profit that is up there, but I think what I want to do is I'm going to move the take profit up, and I'll tell you guys now why I want to move it up and out the way. I'm going to do a trailing stop. We've got today happening, we've got NFTs today. Let me just take a sip here as well. Okay, so today we've got news coming out, and this is what I'm looking at: the non-farm employment change and the unemployment rate. If this one over here, this non-farm unemployment change, if this is lower than forecasted again. Look, this is 164,000 jobs forecasted to new jobs. If this number is not reached when the news comes out, if it is lower than that, that will be a second blow to the US dollar. Remember the first, it was now, I think, 3 weeks ago we had jobs numbers that came out, and that's where the US dollar started crumbling dramatically, was with that job numbers that came out, which was way lower than expected, and that just caused fear in the marketplace. So, and when there's fear in the market, people tend to go to gold. People tend to buy gold when there's uncertainty or fear in the market. In the US dollar or with stocks or anything like that, people tend to buy gold or move towards gold, because gold is a secure currency. It's basically a security that you have is gold. That's why people move towards gold whenever there's fear or uncertainty in the market. Fear or uncertainty in the market is, of course, like this non-farm that's going to happen at 2:30 today. If it comes out lower than expected, they're expecting 164,000. If that number is not reached, let's say it only goes to 150,000 or 100, heaven forbid, if we see 130,000 only. If it comes out lower, than expected, then we might see, I'm working on might, or we probably will see gold rallying and creating new highs in the market, probably moving up. I'm just want to reverse out here a little bit. I want to get to a nice number, 2,560. I just want to make a couple of mental numbers here. 2,550. Let's go to that. That is a nice round number, 2550. Then we might see gold rallying up to these new highs and creating new highs. You have to remember that gold reacts to any uncertainty in the market, any fear in the market. So the reason I'm moving my stop, my take profit, this is my TP, out the way and up is, number one, yes, I'm going to be doing trailing stop. But number two, I'm keeping my trailing stop right there at $100, because if this number, if this 164 is beaten, let's say the job numbers actually comes out to 165,000, which is better than forecasted, then what we should see is gold rallying back down to the lows, coming back down here to maybe these lows, the 2,400, or maybe back to the 2,500. We should see gold rallying right back down to these low numbers over here. All right, so it is very important that you guys understand what moves gold. A lot of people want to trade gold, and they trading gold, and they want to buy and sell gold, but they don't know why gold moves in the way it does. If you grab the concept of why gold does why gold is moving the way it's moving, it will help you to better predict what gold's going to do, better to set yourself up in a better position where you can maximize your profit out of gold. All right, so you need to understand what moves gold. What is it that drives gold? Why is gold moving that way? It's because of the market. It's because of the US dollar. Whatever happens, and especially because the US dollar is the biggest currency there, if something happens to the US dollar, it affects all the other pairs and all the other things. It affects the stock market. It affects the yen, especially the yen. When it comes to the US dollar, whenever the US dollar reacts poorly or good to something, it especially affects the yen, because people tend to loan in yen because of the low exchange rate or the low interest rates. But that I'll explain. I think Trader Nick also has got a nice video on why the yen and the US dollar, explains it quite properly. You can go to Trader Nick's channel as well. And so it reacts to that, but the gold reacts to fear in the market. Whenever you see that there might be fear in the market, and I do suspect that we're going to see lower numbers than expected. And I think the market is setting itself up for lower numbers. The gold is setting itself up for lower numbers. And here's the reason why I say the gold is setting itself up for lower numbers. Because of this move over here, this dramatic drop, this big drop down here. A lot of stop losses got hit there. Look, if you only see, let me go closer. If you only see a little bit of a pullback to maybe this level over here, because this was a good level to pull back to, where you can see the second pullback came into this level over here. You can see the second pullback came into. If it only came to there and back up, I would have said, okay, maybe then they're not setting themselves up for a big push. But because this went all the way back down into the support that it already cleared, it already went into the support over here once, and just came right back into that big drop, meant that it took out a lot of stop losses there. It added a lot of money into the market. It added a lot of money into here. So there is money there's money in gold in the market now, which in turn probably makes me think that they are setting up for a move of absolutely great proportions. This moved down here as well, but that was also reacting to market conditions, reacting to fear, or reacting to good news. If there's good news in the USD, then gold goes down. People sell the gold. If there's bad news, people buy the gold. But I think we've set ourselves up for some. And we're probably going to be bouncing around here to create another zone of liquidity, to get some more money in the market. Like these little sideways movements over here is where liquidity is also being dragged into the market. A lot of buying and selling going on there. Now I think we're setting ourselves up for another little bit of a liquidity building zone, which is a sideways moving market or ranging market. It's building itself up. It's like, and then going for it. Like if you see these little zones where there's little sideways movements like that, you see explosive movements out of it all to the downside or to the upside, because it's building up that momentum, it's building up that liquidity, that money in the market, it's building it up, and then it shoots out. All right, but that's just coming straight from a technical point of view, working on the charts, from what I can see. And this is also from trading for a very long time. You start noticing things. That's why in the beginning of the video I said, you know what, I'm starting to get to that point where I can just look at a chart and see and pick up on where the big players are, what move they made, and why they made that move, and then just put a trade in and just go for it. I won't do that at the moment because it won't fit in with my trading style, and number two, it will affect my risk management. So that's why I don't do it at the moment. That's why I still wait for, break of structure, retest, break of second structure, then I jump into the market. It's just to fit in with my risk management. If I had maybe $1 million account, yes, I would still be trading only in, risking. If I had $1 million account, I will only risk like $100-$200, but I will still work with small lots and small leverage, and then maybe I might just do that, just put in a trade and have no stop loss, basically. But until then, unfortunately, no. I stick to my way of trading, and unfortunately that's the way it is. And I'm not here to jump in the beginning of a move and jump out at the end of the move. That will never happen. You have to just ride the river, whichever direction the river is going. And you don't know. You just see, all right, the river is going to this side. Oh, let's jump in. Or, okay, the river is now going that side, so let's jump in. That's trading. Anyways, that was my saying for the day. I'm not going to keep you guys up the whole time. Now, as it pertains to the euro yen as well, yes, we do see a break of structure over there. We do see a break of the low and a retest, and now another break of that low. So according to my trading style, this is where I would definitely put in a selling order. Let me just put it there. I would have put my sell order in there right now where the blue line is, but I don't sell so close to a major support, and especially with a trading pair, with a pair that's been known to have upward momentum, a lot more upward momentum. Look, if I want to go to the daily quickly. I just want to show you guys here quickly what I mean with there's more upward momentum than selling momentum. If you look at the daily, this market goes up more than it goes down. If you see, so it's more of just and you can go far back. This is 2020. You see, so you don't necessarily, especially with a market that's known to have a upward momentum like this upward momentum, you don't necessarily want to go and sell or short close to a major support. And it is a major support. Look how many times you've been tested. 1, 2, 3, 4, 5, 6 times. You don't necessarily want to sell there. You're setting yourself up for for a disaster. That's what you are setting yourself up for. You're setting yourself up for failure. So on the euro yen, I am bullish. I only buy euro yen. I don't sell euro yen. I don't, because of this reason. It's a market that's just shown to go up and 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 up. All right. So I'm a bull, a euro yen bull. I don't sell the euro yen. Okay, so that's just to show you guys, or to explain to you properly why I'm saying what I'm saying when it comes to the euro yen. There we go. I'll just go back to the 6 hours. I like trading my forex, the currency pairs. I like trading on 6 hours, and then when it comes to gold and the US 30 or the US 100, like stock market, I trade on the 30-minute time frame. I've seen those are the ones that work properly for me. I can take that away now. Nope, it won't take it away because I'm not on it. Okay, anyways. Let me just get to it quickly. If it does want to freaking start coming in now. Time frames, just go to the data. I just want to get rid of that thing that I put there now. Delete, thank you. Alright. So I hope that makes sense when, as I'm saying, I'm not looking for a sell. Number one, I don't necessarily sell or short the euro yen. I look for buying opportunities. So I'm waiting. It might take a run back to the lows here, and then go for a second. Once it gets to this zone over here, I will look. Or once it gets close to this support, I will look for some buying opportunities. So I'll move it up to the high. This is now the recent swing high. Let me just move it up there. Oh, yes. Yo, we're starting this early in the morning. Oh, let me just put my phone on silent because it is absolutely irritating me when... How do I do that? There we go. Do not disturb. Alright, sorry for that. Okay, so that's the reason why I'm not looking for a sell opportunity on the euro yen, because I like buying the euro yen. I don't like selling the euro yen at all. Let me get close to it now again. Alright, so that will be my recent swing high. The reason that's my recent swing high is because the low broke the previous low over here. So that is now my recent swing high. And whenever this one forms will be my recent swing low. So I'm waiting for that high over there to be broken, retested, and then the new high that formed there to be broken as well. I wait for a second run. Then I put my buy order on the high that broke that previous high over there. So wherever that high will be. That's just the way I trade. So pertaining to the euro yen, there's nothing for me here. Yesterday's video I explained what I'm waiting for to happen with the US yen. It's exactly the same that I'm looking for, because I'm looking for a buy opportunity because the US yen has been shown to just move towards the upside. It's a mostly upward momentum pair. Alright, so I'm waiting for this situation to happen here as well. Like I explained in yesterday's video as well, as you can see, what happened here, I was following the swing high. There's the recent swing high. That one over there went in. That is the recent swing high because the low broke that previous low over there. So that is the new swing high over there. What I was waiting for was for price to break that swing high. Price broke it, came back for a retest, and then, as you guys can see, there is a second run over there as well. And you could have said that, yes, that is your recent swing high over there, but it didn't get broken because the candle is not there. Only the wick is sticking out. You have to have a candle break out and close above that recent swing high. So there is the high that broke that high, because we had a candle that closed above that swing high over there. Retest. That one was just a quick retest. It only wicked above. It didn't go a candle. There's the second run. That second one broke this high. So on this high is where I will put a pre-order in. So when price is there, even I'll already put a pre-order in on this previous high, not that one over there, the previous high. So I put a pre-order in, and price came back, put me in the market, and there we go. We just go along for the ride to the upside. So you'll do a trailing stop as you go along. All right, so I'm waiting for this situation here to happen here as well. So I've already marked the previous high, the recent swing high, and that is the recent swing low. So as soon as this one forms a new high or a new low, then of course I will mark that as my low, and the new high as my high, and I'll wait for the high to get, I'll wait for this situation to happen here as well. Okay, so that is what I'm waiting for here on the US yen as well. Just waiting. When you trade, you have to know patience. Patience is a very important, it's not the main thing, but it's a very important thing when it comes to trading. Is you need to have patience. You need to wait for your opportunities. Don't just jump in because market is moving in a direction and you're scared you're going to lose whatever there is. Don't do that. Yes, market will move sometimes, but it always usually comes back to that spot where it moved from. Like if, let me explain here quickly. This is actually quite a good example. Right here, let me show you this quickly. Whenever you see like, oh, market's running away, market is running away. Look at this big candle there. Market always comes back. Look at this big move over here. You're like, oh, I missed that move. It always comes back. Even majority of the times, it comes back to the 30% retracement. So if you work on the top of that move to the bottom of that move, it usually comes back to the 50% retracement. After you see a big run to the downside. Now you see, money is running, so you want to jump in. Now, leave it to form, and once you start seeing, alright, we're seeing some upward momentum, then mark your Fibonacci and wait for it to get to the 30% retracement. A lot of people trade that way as well. They put an order in on a 50%, and there you go. You just follow it down. But never just jump into the market because you see markets moving in a direction and you don't want to miss out. You're going to set yourself up for failure when you do that. Don't jump in because you see the market's running. Because sometimes where you jump in is where the market stops and then it goes in the opposite direction. So don't do that. You have to be patient. You have to wait. Trading is just patience, waiting, and putting yourself in a position where you feel comfortable to put in a trade, number one, and where you feel confident. Working with your own money, that helps a lot to get rid of that nervousness that you have, or the anxiety you have when you trade, that fear, or I want to put tight stop losses because it's your own money. And when you're confident in your trading method or your trading style, and you have in your mind evidence that show you that it is a profitable strategy. It works. Your strategy that you're using works. It is a positive on your first start on a demo account and trade at least for a year on a demo account and use your strategy that you use. And at the end of the year, you can see if you've made money on your account or you've lost money on your account. Just because you have a good month now, don't decide to put money into a real account and then, okay, because you are the best trader in the world, you made money this month. No, markets are difficult. Some months you have good, but some months you have drawdowns where you don't make anything. So you have to work on a year. And after 12 months, see, have your account grown or not? Then you can only see what kind of results your strategy brings in. Like the strategy I've been using it for 5 years now. So, and it's a winning strategy. It's a very good strategy that I'm using. That's why when I put money or when I put trades into my real account, I don't have that fear of losing money, because number one, my risk management is, to the T. I stick to it, and that's that. I don't risk more than 1% of my account, and that's it. If I lose a trade, I lose a trade, but it's only 1%. All right. And number two, it's shown over the years that the way I trade is profitable. So that fear goes away. It lessens a little bit. Especially when you'll notice when you start working with your own money or hard-earned cash, when you put in trades, you like, especially if you're new at this, you sit there at the screen the whole time and like, shit, maybe I must just I'm in the profit now. Maybe I must just cash out now. I'm in the profit. Yeah, maybe I must just, or maybe you see, if that happens to you, you have to know one or two things. Number one, either you trading too big lots, you there's no risk management, or number two, you don't have confidence in your trading strategy. There's no confidence. When you sit there and you're wondering, oh shit, must I put the trade in now? Must I cash out now because I'm in the profit? Don't do that. Use a strategy. Use it for a while. Use it at least for a year on a demo account. And at the end of that year, see, have you made money or not? Then you will know and you'll have confidence in your trading method or your trading strategy or the way you trade. So when you've got confidence, you don't have that fear, of when you use your own money. You don't sit in front of the computer chewing your nails and thinking to yourself, oh, must I cash out now, must I not? I know it's a lot to take in, but my trading channel, my trading platform is brand new. It's new, but it's a no bullshit trading platform, or YouTube channel. So it's where I give my opinions, and I trade live every morning, and I hope you guys find value in what I'm teaching or what I'm showing you. So I hope you find value in it. All right, I'm not going to keep you guys too much today. There's nothing much for me to say. Like I went to the market now, and there's stuff I'm waiting for. Like the gold also, I'm waiting for the news at 2:30. South African time, 2:30. So the time now is around about 8:45 in the morning. So I'm waiting for 2:30 in the afternoon. I might go live, but I think I won't be home because I'll be making my way to my show. So I don't think I'll go live with the non-farm, but I will definitely see you guys back on Monday morning again when we see what happened with the NFTs. Luckily, I've got $100 in the bag here. So this is where my trailing stop is. I entered the trade there, and I've got $100 already bagged. So whatever happens with it, I've got $100. Or if it does decide to go all the way there, which I hope it does, I will have $218. Okay, so we'll just see how it goes. From my side, Winston, good to see you. Okay, Mr. Man Forex Trading. Please, guys, enjoy your weekend. Be safe, and I hope to see you guys back here on Monday. And enjoy the NFTs, eh? And please like and share. And if you have anything you want me to have a look at, please put it in the comment section down below, and I will go live. When I do go live in the mornings, I will have a look at whatever there is. And it can be stocks, it can be Bitcoin, it can be NFTs, it can be currencies, it can be oil, gold, silver, copper, whatever you want me to have a look at. Put it down in the comment section below, and when I do go live on the mornings, I will go through those ones first before I get to my trading. All right. Just for everyone here, here's the history of this account that I have here. I'm just going to take off my smuck here so you guys can definitely see what's going on there. Let me just take that away. Take it away now. Alright, so this account is a demo account. I don't trade on my live account on YouTube Live because there's clever people and I don't want them to hack or whatever. I don't know. I'm not clever with computers, but I've heard of people that their accounts got hacked. So I'm using this demo account when I go live. But luckily, I don't have to show my main account because I trade live. Everything is open and anyways to see, even if it's a demo account. So I started this channel or this account. I opened this account on the 22nd of July. As you guys can see there, I made it a $10,000 account. And then I started trading live, went on live on YouTube. And here is all the trades that I took, all the trades I've done. And as you guys can see from here, that's a month and a half now that this account has been going. And we've grown this account to $475, which means I did go live, I think it was on between the 15th, where I just want to check quickly, it was on the 8 months. Yes. Yeah, between the 15th and the 28th, because I started this account on the 22nd. So on the 22nd of August, I went live again, and we had a look at this account, and the account was up 400 and some odd dollars. So it's a 4% growth on a $10,000 account per month on the first month that I've been using this, which is not bad. It's 4% growth on an account per month is good, but just remember, you're not going to have 4% every month. You're not going to have 5% every month. Some months you're going to have a -1 or a -2%. So you have to be willing to endure those months. But when it comes to risk management and proper risk management, you will endure those months where that happens. So since then, on the 22nd of this month of September, I will go live again, and so that will be the 2-month mark of this account, and then we'll see where the numbers are. All right, where it is so far for this month. I think we're up $70 or something, because there we've lost the 40 and the 50, but I made the 123, and so there's a 204.50 there on the gold. So we've made a couple bucks. So we'll see how it goes. So on the 22nd of this month of September, I will go live again, and we can go through all these trades and see in 2 months time where the account is. And I do this every time it's open. It's here on live on YouTube for everyone to see. You can see the trades that I've taken, just to know that I'm not a bullshitter. And also when it comes to money management, like I said, I don't risk more than 1% of my account. You will see that these trades is all basically at the 0.5% of the account, So which means on a $10,000, which is $50. So, you will see majority of them 26, 30, 34, 24. Here is 103, which is 1%. That is a max that I would risk on this $10,000 account. So you'll see 15, and then coming in, of course, you see 108, 140, 250, that was quite a nice trade there. I don't know what happened there. I probably had a slip of the hand or something like that. But then at 48, you see the majority of my trades, I try and stick to only risking a 0.5% of the account. All right, so it just keeps you out of harm's way, and I religiously stick to that. But here's the proof, all on black and white. There's nothing. I'm not hiding anything. Nothing I'm hiding. It's all right here for the whole world to see. So I know that no one can say anything or do anything negative about it, because I'm as open as a book here. Trade live every day, and here's the history. And that's it. If you find value in what I do, remember to like, share, subscribe, and let's see if we can grow because this is our YouTube account. Let's see if we can grow our YouTube account to try and prevent these so-called trading gurus from scamming more people and scamming more potential traders. But that's my saying. From my side, please have a good one, and I'll see you guys again on Monday. Cheers.